Right. All right. So, in case you haven't heard before, I've had Mike on. Mike, thanks a lot for being back here. Mike's a note investor, and he's spent a lot of time talking with me, hours, definitely more than several hours, talking with me about how to get started and how he got started. And I'm going to ask him to tell his story about how he got started in just a minute. First, I want to say, if you're not sure how you got here, who I am, my name is Breck Palumbo. I run DistressPro.com. It is the fastest, easiest way to find, qualify, and connect with institutional sellers of distressed debt, non-performing loans, and REO. And you can find me at DistressPro.com. Click the big red button when you get there to learn more about how the whole thing works. One of the things that I do from that site is I regularly interview experts in the field who come here either on a podcast or on a webinar and teach us a thing or two. And so that's what we're going to do today. We're going to have Michael Rosica back. And I'm going to, if we have time, I think we're going to have time, then what I want you to do is we're going to do a Q&A. So I think that would be excellent. Mike, tell us a little bit about where you came from before you started in the note business.
Sure. Yeah, thanks again, Brett, for having me on today. I started back in 1999 buying a couple of local properties. I thought I was doing the right thing by investing in some rentals, which I still own today, and it's turned out to be quite a lot of work maintaining these things and keeping them going. And I found the note business back in 2007, end of 2006, and I really thought that I found my home. I found my niche that I was going to specialize in, and it just so happened that the market had just turned around and gave us a perfect opportunity, kind of the perfect storm to really jump into this and build up my network and all that stuff. So working with notes has really been my, my calling, if you will.
Right. So before you started investing in real estate, did you have a job?
I did.
What was it?
I worked as a manufacturing engineer since I was in the last company 15 years working, building NASCAR race components.
Okay.
It was a great business, but it was time to go. And I luckily found this note business that has been able to carry us through and quite an enjoyable ride as well.
So you're working as an engineer. You decide that you need some other income, I assume? You were looking for a way to maybe had some cash around, or were you looking for passive income? What was the motivation?
Yeah, well, like I said, I quit my JOB in 2005.
Yep.
I had done my real estate investing since 1999, and my big plan was to go out and flip houses.
Right.
In 2005, I became a realtor and got into the business that way, and I flipped a couple of flops and realized that was way too much work, and finding the note business again was perfect timing.
So I'm going to turn the screen over to you now. I want you to take us back and just tell us a little bit. Tell us how you did that.
Yeah, my name is Mike Rosica, and I've been working with NoteConference.com since 2008. I've been working with Breck on Distress Pro since December of 2011. I had to dig through my old emails to figure out how long ago it was that we had connected. And it's been enjoyable having your company and your expertise.
Oh, well, thanks.
Like I said, I started investing in notes in the beginning of 2007, and I created my personal network in 2008, which is NoteConference.com, and I've enjoyed many friendships in that network that I've created, and I still run that to this day.
So how long did it take you from when you decided that you were going to do this full time? What was your process moving into a full time role with this, with notes?
It was education. I needed to be educated. I needed to learn this business, and I needed to surround myself with people that are a lot smarter than me, which I still do to this day. And and Breck, you're one of them.
Oh, too kind on that front.
Well,
So,
yeah.
so tell me
Well,
about.
that's kind of what Sorry.
No, it's all right. I'm sorry to keep stepping on you. What I want to draw out of you, what I want to have people understand is kind of your trajectory, the things that you did that kind of led us into now. Here we are. We're talking in front of a couple hundred people or 100 people, whatever it is, and you've been in the note business full time for what is it, 5 years, if my math is not that bad. 6 years. And what I want to understand a little bit is like kind of that trajectory of how that all worked out. And then if you could dive into how to build your network of buyers and sellers that I know we're going to go through in this presentation, then we'll do some Q&A. That'll be awesome. But I feel like it's important to get the context behind where how you got here, who you are, and how that all happened. Because I think a lot of times when people are sitting there, they haven't really made an investment yet, maybe, or they're just getting started, or maybe they've done a little bit, but it looks so far away sometimes to see. Well, that's great for Mike Rosica. He's making money and doing deals from the ski slopes and whatnot, which is a true story. And but how does that? I don't know. That seems really far off for me. And so what I want to try and do before we get deep into how to build your network of buyers and sellers is really illustrate for them, for anybody who's on the call today, how you got where you got and kind of some of the steps along the way. Is that all right?
That's perfect. Well, this is exactly how it happened. I was going through emails and I found an education program that was being offered by a person who was willing to teach the note business if we were actually purchasing notes from them. And they were webinars that were held every other Wednesday for about a year. And we all jumped onto these conference calls, all meaning myself and other investors. I think there was about 40 other investors. And we went through this program and we were able to jumpstart our business by being educated and learning from someone who had been in the business before. I think they were in the business for 5 years by the time we got onto these webinars. So we were able to jumpstart our education by using someone else's track record and their actual experiences.
So when
had I stumbled on this and said, "Ooh, I want to start investing in notes," and who do I talk to? What do I do? It came down to having an educational program
right. So
to really get us started.
You started buying from like a wholesaler, from a hedge fund, from what?
Well, I would actually say it was a retail purchase.
Okay.
We were the person that we were buying from. That was wholesale. They were buying them at wholesale prices and then giving us the education if we purchased them at retail prices.
Okay.
Above retail prices. So that's how this hedge fund was able to make money, was to give us the educational program that goes along with it, as long as we bought their non-performing product.
Interesting. And so
it was a very unique niche, I would say, on how I was able to learn this and really take advantage of having all the people that were on these webinars share their experiences as we all learned at the same time to go through our note education.
So at what point did you start sourcing your own product?
I started sourcing my own product for 2 reasons. That was at the end of 2008. The beginning of 2009, I realized that there was a much bigger world out there, and some of the product that we were offered was starting to dry up. So I reached out to find other product, and not doing this to become a note broker or anything. I just wanted to find notes for myself and for my friends. And so I reached out and I ended up meeting some guy at Starbucks, and I had to give him a check for $3,200. And he introduced me to another hedge fund that was willing to sell us notes. And for, I think, about 2.5 years, I ended up supplying all of my people that were in my note conference network with product.
Cool.
So I kind of did it in a backwards way. I became an investor first and then a note broker. And that's why I'm here today. I'm here to explain to people that, I'm just an average guy who figured out a niche system to kind of take everybody, to the next level, and really, instead of being an average investor or, not really having a direction, to really turn this into a professional business and a money-making business as well.
So I want to dive into your presentation and get going with these slides. But the last thing that I wanted to do here before we do that is just to bring people up to speed. Then, so what does your business look like today?
Today, I own performing notes. I own some non-performing notes. I partner with many people that have money, and we're able to select notes to put into their portfolio, and I take a share of their note income. That's been working out very well for us.
Okay.
I can go a little bit more in depth on that, but I don't have to use a lot of my own money because my money's tied up in other notes.
Right.
So I figured out a way to kind of help other people that are less experienced get into this business as well.
By doing some equity shares and whatnot there, it sounds like.
Correct. Yeah. I get a 20% share from any revenue that's generated out of the notes that I help people select and put into their portfolio. That's just one way. I also do get involved in a lot of note transactions, a lot of brokering, if you will. And that's where, I want to go with this presentation a little bit, kind of
Okay.
in the brokering part of it.
So I want to stop holding you up then and and let you take us in there. But I think it's important to know, I know at least when I hear somebody speaking, I want to know where they came from. I want to know that they really did it. I want to know that this is really their business, and I want to know that I can do it too. And so thank you for taking that time to lay that out. And so let's get into the specifics of today, what the people came for today.
Sure. Well, what I know that this conference call was actually going to be about creating a network and becoming a broker. And I have advice that actually is counterintuitive, and people may look at me a little crazy. But in this next slide, I'm going to say something here that is going to be, like I said, a little bit contradicting, is not to become a note broker. That is absolutely where people should not focus their drive on. And it sounds like, why are you having a brokering conversation or brokering note conference and telling people not to become a note broker? I don't know, from my experience, I've talked to a lot of investors over the years, and note brokers are not particularly liked in the industry. They are not looked at as people that are, someone that note investors like to hang out with.
Hey, Mike, I'm getting a couple of questions. I'm getting a couple of requests to ask you to speak up a little bit. In the people are having a hard time hearing you. In the
Sure.
Thanks.
Yeah, let me get a little closer to the microphone. Make sure that's clear, Breck. Can people hear me?
Yeah, I can hear you. If you can't hear Mike, let me know in the questions box.
Okay, great.
Okay.
So my point here being that note brokers are basically not looked at as people that note investors like to hang around with. They note investors like to hang around with other note investors, and they think that brokers are just out to clip them and to take a few pennies off of their trade and take thousands of dollars out of their pockets. So note investors look at brokers as, not a nice place to be. And, you know, the note sellers are also kind of leery about giving their notes to a note broker and saying, "Here, go out and sell my notes when they have product that they want to move." So that's kind of what I'm driving for here, and I'm sure you can see it on LinkedIn as well, where it says we have product, but we don't want any brokers. We want to go direct only, and so that's the point of this conversation: is why choose a business that people just really don't want to work with you. So great. So I just ruined everybody's ideas on becoming a broker.
Thanks a lot, Mike.
But yep. Okay. So I see everybody just signed off and they went home. No. So great. So what's the big plan here? Well, the way I started it was I became a note investor first. It's just by chance that I had a few bucks to go out and get some to go out and get some notes and start my education as a note investor.
What's a few bucks?
At that time, I think I had 50,000.
Okay.
That I had given to this company, this education company, to go and get a return on my investment until I found product that I liked, and then I can pull that down and draw down out of that $50,000 account that I had. So in my mind, it was a great education, and it was a great way to buy notes, but the notes were very expensive, and that's fine because I was paying for a business that I'm still in 6 years later. So we all understood that on these conference calls that we took. And so my point here is to become a note investor first, but you don't need that $50,000 to do that. Everyone here can be an investor just by going out and learning the business on what it takes to be a note investor. That's the point here. Even if you don't have 20,000 or 50,000 like I did, or some of my friends had even more than that, I became a note broker, or I became a note investor that had product. And so all of my note investor friends, we all were able to hang out together and talk about notes and learn about notes together as investors instead of playing the role of note broker. Because people, like I said, they consider a note broker just someone who's going to put their hand in their pocket.
Right. It's like when you're at a meetup or something and everybody's there, and then there's that guy walking around forcing business cards in everybody's hands and, talking about insurance or whatever.
Yeah. Yeah. Something that you're just, you just turned off by.
Right. You want to do it
so
different.
I would like to see everyone on this call just claim themselves to be a note investor right now. You don't need to have any capital to become an investor. You're just an investor that is in the process of learning how to be a better investor. And it's a completely different mindset when you go in to a bank and you are an investor that is looking for assets instead of, I want to go and broker your notes out to a bunch of other people.
So is it a mindset or is it just semantics? I mean, help me understand the difference here.
Well, I always picture myself when I'm trying to label myself is I picture myself being at an event and having to introduce myself.
Yeah.
Hey, I'm Mike Rosica. I'm a note broker. Oh, great. But I do broker notes, and it's a major portion of my income. But I still present myself. My elevator pitch is I am a note investor because I own several notes that are performing, that I've gotten them performing, so I act as an investor as well. So
So you're a note
it is a
investor
mindset.
who happens to get access to product, and you might be willing to move that product along to other investors.
Absolutely.
Okay.
And now I'm looked at by my other note investor peers as someone who's actually bringing value to them. I can help them evaluate the notes. I can help them assess what notes they should actually be investing in or not investing in. And that's a huge win over just saying, here's a tape, have at it, tell me which ones you want, I'll present the offer. That's there's no value add there. There's no value add for the note investor, and there's no value add for the note sellers that you're trying to move this product out for. So it's a mindset, and it's also, it has to be, the education has to be behind the note investor to let them talk the language, and just to be able to hang out with other investors. Let me just click on this here. Yeah, kind of have to learn our lingo. Like, what are we after? What do we want as investors? Obviously, we want higher returns, we want good assets, and we want them at the right price. Well, that's your job as a note investor with product to satisfy the other note investors' needs. And you can help all of your note investor friends out with with different tips and things that you discover along the way as you go through your journey as a note investor. Am I kind of clear? I know I'm
Yeah, help me
covering a lot of stuff
understand.
here, you know.
Help me understand what you mean by hang out with. I mean, what is there a structure for that, or how do you do that?
Well, in my mind, I do everything webinar based.
Okay.
I still go to physical meetings. I still go to RIA meetings and introduce myself as a note investor, and I try to find other people that may find an interest in this business, and I talk to them about the note business. That's all I do. That's all I talk about. Probably drive my wife crazy, but
So what do you do on these? What do
everything.
you do on the webinars or calls that you have?
Yeah. Well, I'll be getting that in a
All right, I
second.
won't rush it.
Yep. But you know, we are definitely talking about building a solid business, and by hanging out with note investors, you will learn what these other investors are doing to make themselves quite a bit of money. Because, in my mind, being an investor, goes back to Rich Dad, Poor Dad, the four quadrants. I've always thought that being an investor is a lot better than being an employee. And so that's where I like to hang out. And I want to talk to investors that are out there making a killing and be able to supply them with enough product so that I can get a piece of that pie and enjoy basically what they're enjoying as well. So, with that, back to your question, I built a network that works different. I built a network that is mine. I Let me get to this here. Building a network is a lot different than actually going out and networking and going to an event where there's 400 people and you got to go through every person, shake their hand and shove a business card down their throat.
Right.
That to me is not how you're going to build a network. You're going to build a network by going to those 400 people event and finding two folks that are in there going, yeah, what is the deal with this note business? I hear a lot of people talking about it. I don't know anything about it. You need to be prepared to offer a little bit more education than that person may have and say, listen, I have a webinar that I run once a month. Why don't you jump on the webinar? We'll talk about notes. You tell me what you've discovered, and I'll tell you what I've discovered. So it's one person right now. It's you, the investor, and this new person that you met at a 400-person event that you went to. And so now you've got a network. How many people does it take to build a network? It's you and someone else in my mind. It's almost like you want to build a mastermind group where you're going to share ideas with this new person, bounce ideas off of them. maybe look at a couple of notes that someone showed you that you can go through and assess and say, I wouldn't pay 5 cents for this thing, or boy, this is a really good looking note. Let's figure out how to get some money and take it down and buy it. It's
So
it's a team sport. It's a team effort, you know.
So when you're talking about webinars, you're not talking about doing these one way. You're broadcasting out informational type of things. You're talking about getting like minded people in the same place on some kind of platform to communicate on a regular basis once a month.
Exactly. Yeah, what I've done for years, I had GoToMeeting for a while. Then I switched over to freescreensharing.com because it was just such a nice platform.
Mm-hmm.
That had very limited recording capabilities. When I started reaching out to more people and people that couldn't make it to my webinars or my recordings, they would follow up with the recordings. So then I ended up getting and purchasing GoToMeeting subscription. And then now I have more than 10 people. You have to go to, it looks like what you have, go to webinar.
Yeah.
And it is, or it was in my earlier stages when I only had maybe 30 or 40 people on, it was kind of an open mic where I may have had a topic. Like I just had a topic last week where we started using some financial calculators on my one of my recorded webinars, using some sophisticated calculation software to determine our actual return on the notes that we were purchasing.
Mm-hmm.
So that was a free conference call. Everybody jumped on. I had one person that I really wanted to kind of keynote. He had a lot of information to share out to our group, and he was the main focus. But it was an open mic, like anybody could talk, but everyone had to like mute themselves. And that's the kind of thing that people really need to do, and that's a mindset as well, because you're now using the power of a network to increase your net wealth, because you're up in front of, let's say you've built your network up to 6 people now, and 2 of them may have money, 4 of them don't, and you're out looking for notes, and you finally used Distress Pro to come up and you found 15 notes that you want to show out to your group. Well, this is a perfect opportunity now to go ahead, show these things out, do some collaboration to research these things, and have all 6 people take 2 notes each, go off, do their research, come back, put a price tag on them, discuss it on another webinar, and take down the tape. And that's exactly how my first trade went. It was a collaboration between 9 other investors, and I'm sure you might have heard this story on maybe another previous call that we've had. But we collaborated and took down, our first trade was $184,000 that we spent.
Okay.
And
how much of that was yours?
I spent 50,000.
Okay.
And that was back in the end of 2008, and we actually closed in January 2009. And I still own some of those notes to this day. They've been performing well for me. So that was a worthy investment, but I did not make a dime because I never figured out how to make any money off of brokering. That came later, and I just wanted to get that deal going, and it was all because of my network and my determination to go out and find product for myself and my note buying buddies.
So you're talking about so far, really in a calculating way or in a measured way, to seek out your best candidates in terms of people that you want to network with, and then to focus on building a relationship with and growing that small group on a consistent basis. That's what I've heard so far. How am I doing?
Yeah, basically that's it. And it, like I said, all of this kind of happened by accident. It's not like I had this cold calculating plan to do this. I enjoyed talking, and I still do, talking about notes, like I said, until I'm blue in the face, because I can't get enough of it. I enjoy it so much that it just is a very powerful position to be in as a note owner and as a note broker as well. So yeah, these conference calls just kind of happened, and it was a continuation of the educational webinars that we had all participated in the beginning, and that's how people can actually duplicate what I've done, and they can just go out to a RIA meeting or get on LinkedIn,
So
find
ARIA,
find a
if
couple of
you
people.
probably everybody here has heard of ARIA before, but it's a real estate investors association. They're all over the country, and you can find them. Is there a central place where you could find out if there's one near you? Do you know, Mike?
I believe that there's a national RIA that
Okay.
you can look up. I don't do that. I'm familiar with a few different groups that I belong to. I live over on the East Coast, and I'm pretty familiar with the local ones. But I'm to the point now where it's very easy for me to come up with new note investors. I've just lived it. I know a lot of people that are in this business now, and I'm always looking to meet new people as well, people that aren't familiar with the note business. And so here it is. This is what I've been using, freescreensharing.com.
Yeah, you could also use
Started
Google
over.
Hangouts. Is a new Google's got a Hangouts thing. It's free, and you can have people on there to chat, do video
Nice.
conferencing, and all that kind of thing.
Great. When I was early on, when I only had maybe 15 members or something, everyone knew who was in my group. Each other, the 15 knew each other because we were collaborating to take down notes. Then, as it started to grow, I started to become a little bit more private about all the people that I've gone out and put into my network. So it's kind of a one-sided network because it's grown so much now that I want to keep some exclusivity to it. So that's a whole nother process once you grow your network. I send out an email blast, but the all the members don't know who I sent it out to. I will put one person in touch with another person, that's fine, but I don't go and create a list of 250 people and let everyone know each other. That gets a little sticky there. So
No, I mean, at some point, if you're the one providing. I mean, there's only so much free stuff you could do. I mean, if you want to be, I don't know anyone who doesn't protect their contacts. Let's just say that. So I think that's a
okay,
totally reasonable thing to do. A couple of things over here in the chat. Thank you, Rick. It's nationalreia.com if you want to find those associated national REIAs. And then Clint, you're totally right. Go to meetup.com, type in real estate meetings, and you'll find them. And you'll find them in your area. And that's a good tip.
nice, perfect, thanks. Yes, so that's I created a cheesy website just so that I had my name out there in the beginning. I send out regular emails, and I've haven't gotten into newsletters or blogs, but I'm sure that people that are much more skilled than I am can go ahead and create a blog. Like I said, if you create a blog, then you kind of lose that anonymity where everyone kind of knows each other, which is fine. And I tried doing that in the beginning, and I found it just so clumsy, and people asking redundant questions.
I think the important thing that you're doing here, Mike, is that you're putting out regular content. I mean, it's to a targeted crowd. It's kind of it's closed or whatever. But the point is that you're having these. I mean, you're providing your value, showing your value, demonstrating it by pulling the folks together and publishing, even if you're publishing privately. But if you're sending an email to a bunch of people, or if you're doing a call to a bunch of people, whatever, this is publishing, and it builds your brand, builds your awareness and trust in you. And so I think it's a great way to go.
Yeah, yeah, and it the reason one of the reasons I do it because I enjoy it. Obviously, I told you that, but you need to have familiarity so that when a tape does come my way, boom, I send it out, and they're like, "Oh, no conference. This guy, he's serious about this business. He loves this stuff. I respect him. He's got he's given me some great tips, some great information, and he's helped my business out tremendously. Let's take a look at this tape and let's see what we can do. Those are the kind of people I want to do business with. It's not like I have a contact list, I send out this tape and, there's, we all have common ground. And that's, I think, key to my success in this business is having that bonding with other note investors, so that now I can kind of, okay, I'm switching roles. I'm not a note investor now. I'm a note investor with product. Let's all collaborate and take this thing down together. It goes a long way. It goes a long way to differentiate yourself from the note brokers that are all over LinkedIn spamming each other. It's a crowded space, but you need to stand out. You need to become an expert in your area too. Like, I have one friend of mine who has become an expert just in bankruptcy law, and another expert who has just become more into the REOs once the notes get taken back. If we have to take back the property,
loan to own.
That's another person.
Yeah,
real estate owned.
Yeah.
So you need to find your niche, become an expert in a certain area of this business. And I actually have another friend of mine who's on this call. I don't know if you want to unmute him, Brecht. His name is Mark Munson, and he's been helping me with my brokering business because it's getting quite busy and handling a lot of material. And he's been quite helpful in helping us take down some product and move stuff out. He was one of my original Note Conference members back in 2008, and he's been in this business a long time as well.
I am trying to send Mark a code right now, and if you want to just if we want to keep going, we can do that. But I've just sent Mark a code to be able to get him in here. So,
and I think we've yapped away long enough, or I have. I'd be interested in taking any questions.
So you want to do the Q&A now? Let's do that. We promised we were going to do a Q&A. We talked about building your network through sharing in education and through a regular prescribed content distribution, which in Mike's case was through his webinars and his audio calls. And so now I want to open this up and talk to some folks. So if you have any questions at all, go over in the side and type in your question there so that we can get it. We want to get them answered for you. And so I have one, and I think we're going to get to this in a minute. But Steven wants to know what's your email, and I think you're going to invite people to connect with you in a minute, right?
Sure. Yeah, I can put that up there now.
Okay.
That's me.
Right. So here's what we're going to do. If you send Mike an email, just say you heard him on the Distress Pro podcast, and you're going to give something. You're going to let them in on something, right?
Yeah, absolutely. If you put your name put Distress Pro into the subject line or something to do with that,
just to let you know,
you can go to noteconference.com and you will be able to, let's see.
You're going to get them in on one of your calls?
Yeah, hold on one second.
And I got a bunch of questions coming in. Do keep putting them in there. I'm going to start addressing them one by one in just a minute.
Just give me 1 second here.
All right. Mark's working on getting back in. He got booted.
Anyway,
Steve wants to know. Yep.
Yeah, this is what the website looks like. If you scroll down to the bottom here, submit now for instant access, you can go ahead and put your name and email in there, and that will give you a username and password for the archived recordings, because that is password protected. But I'm opening this up to you guys right now to go in and listen to some of the archived recordings. I will be putting more up probably within the next day or so. So check back a few times to make sure that you're getting the latest ones that we've put up.
Okay, awesome. So I've got a bunch of questions coming in. You ready to start handling some of these?
Yeah, fire away.
Okay. Stephen wants to know, what fee do you charge? Stephen, I think we probably want to know a little more about that question. Are you talking about brokerage fees? Are you talking about which? Am I right, Mike? Do you need some more? You need to flesh that out a little more? I imagine you have more than one fee in your life. You probably have a few fees that you charge. So, Stephen, pop that in there so we know exactly what fee you're talking about. I got another question.
Well, I can go ahead. I can go ahead and answer.
Okay, cool.
Brokerage fee if you want.
Yeah.
The way I work it is I take 2 cents off of the unpaid principal balance of a trade. So if I find a tape that's being sold and there's $450,000 worth of unpaid principal balance, then I would just multiply that times 0.02, and that's my fee, 2 cents. And I've yet to find anyone that complains about giving me a 2-cent commission for doing something.
Okay.
Although, if they calculate it, it's $9,000. So that's not too shabby for a quick trade,
Right. And so you're getting 2 cents on the face, not on the final close price. Or did I get that right?
Not on the face value. Yeah, I guess it would be it's not the original amount of the note. It's what the
unpaid.
Principal balance
That's what I mean. Unpaid.
At the time of the sale. So It may have been a $150,000 note that's been paid down to $90,000. It would be on that $90,000 and not the discounted purchase price.
Right. So if they buy it for 45, then you're still getting 2 cents on 90, correct?
Yes.
Right.
Works out to a 20% commission, really, or 20% fee.
You want to say that again in case anybody missed that?
Yeah, it's actually 20%. It's 20% of the purchase price. So it's a fair amount of money. It's not like a real estate brokering fee.
Right. So
is serious.
I think you answered this in your last question, but David wants to know, when brokering deals, who compensates you, the seller, the buyer, or both?
I basically compensate myself. So a typical trade, let's say we use that $450,000 as the price, or as the unpaid principal balance. If the investor comes in and says, listen, I would like to offer 50 cents on the dollar of that unpaid principal balance, I then go back to the seller and tell them, hey, Mr. Seller, I have an offer of 48 cents on the table. So, it depends on how you figure out who's paying who, what.
Okay.
I'm really just I'm taking care of the issue myself.
Right.
I'm getting an offer in of 50 cents and I'm sending that out at 48 cents. Simple as that.
Cool. Can you close that your no conference here so people can get your domain and email in case they missed it? And then I'll fire through some more of these. So I've got Jason says, I've learned a lot from listening to your podcast. Thank you, Jason, for saying so. And then he says, can you go over a script of what to say to the banks to get a meeting? Once in the meeting, what can we do when they ask for proof of funds?
Okay, can you see the contact info?
Yep. Perfect.
Okay, good. Well, why don't you run through that, Brecht, a little bit, as far as getting around the proof of funds and all that stuff.
So the way that I came into this business is not as a note investor. I was a service provider. So I have auctioneers licenses in a bunch of states, and I have brokers, real estate brokers licenses in a bunch of states. So it's a little bit different because my approach was always to get a fee from the seller by representing them in the disposition of an asset. And so I would go and get an exclusive right to sell a contract for a term with some rates in there in different conditions. So if I ended up selling the note beforehand, I would get one rate if this was a foreclosure. If I sold it at the foreclosure, I'd get a different rate. If they booked it in, I might have a tail on it, which meant that if I sold it back to the bank at the foreclosure, I might get a tail on my contract, which meant that I then still had the opportunity to sell the thing for a while after that. And so I don't know how applicable my experience is going to be with this particular end of things, because the value proposition that I'm delivering is very different, and so to tell you the truth, I've sold an awful lot of bank assets, and I've never, and I talked about this in a previous podcast, never taken a proof of funds from anybody or submitted one to anybody ever. And so that's not something that I have run into. I know that a lot of people have, but typically what I would do is market an asset, and your proof of funds is the money that I take from you and I hold in escrow until we close, and I liquidate in case of default. And other than that, there was no proof of funds. Now, I don't hear that from other people. I hear a lot of other people who are running into that a lot, but for me, it just wasn't part of my business, and I'm pretty open about that. So,
Well, I just had a tape come through with, I believe there was 200 performing notes, and I was told the procedure. This is how it's going to work. You need to supply proof of funds, a letter of intent, and I'm like, yeah, sure. And so what it came down to was we all sat down, and this was a collaboration between several investors. We sat down, we figured out which notes we were going to purchase. I think we put an offer on 21 of these things, and we took the tape, we cut out the 180 that we were not interested in. We took the 21 that we were interested in. We put a number next to that, what we were willing to pay for it, and we submitted it. And that's all people, at the end of the day, I think want to get to is like, how much do you plan on paying, and when can we close?
right.
And just submit your offer and just blow past the. I'm not proving funds. I'm just going to say, listen, these are assets that may fit into our criteria of buying, and just let us see the assets. And I've never been asked for proof of funds before I was able to see the product.
Yeah.
The only time I was ever asked was from some other broker.
Exactly.
I don't want to call him a joker broker, but it's someone that you meet on LinkedIn who's direct to be direct to the seller.
Right.
And I've actually had brokers come up to me as I'm trying to sell my own notes that I owned in my portfolio. I had 7 notes or something. And someone came back to me and says, I got these 7 notes. They're great. Blah, blah, blah. I'm direct. I'm so direct,
Yeah.
And I'm like, these are my notes. I can't believe this.
Yeah.
How direct are you? Oh, I'm direct. Yeah. So it's, I was waiting for him to ask for proof of funds.
I've got some other questions coming in on that I want to address. Here's somebody with my personal phone number. Mike wants to know: is he holding the notes for closing or flipping?
My personal notes?
Are you? Yeah.
I would have to say yes.
Yes, you're doing all of those things depending on the situation.
Yeah, it really depends on the situation, and it depends on the exit strategy that I chose before I ever bought the note.
Right.
I have I have learned to figure out what I'm going to do with this asset before I take it on, so that I at least have an idea of how it's going to turn out. I can't predict the future, but I can say with some certainty that the the, the path that I choose up front will determine my exit strategy to exit the note. So there are notes that I purchase to flip. There are notes that I purchase that I know I'm going to hold either personally or in my IRA. There are notes that I purchase that I know that I'm going to partner up with someone because I, I turn out that I have several investors that I work with now that are just looking for product, and they love when I partner with them because they get my expertise along with the ability to go about their daily tasks and not have to worry about the stuff that I worry about when taking on their product. And that's kind of what I talked about earlier on. So I definitely have an exit strategy before I get involved with a note. And in foreclosure, I try not to foreclose on notes unless it's absolutely no other alternative. And it's very rare that we go down that path. But I purchase a lot of junior liens, so it depends on the position of the note that I'm purchasing as well.
And so, I don't think we talked about this very much, but are you exclusively in residential?
I am.
Yeah,
Yes, I don't know a thing about commercial. I, and I say that because I drive around town and I see strip malls that are almost completely vacant that was built 15 years ago. And
sure.
then right down the street, I see a strip mall that's completely filled up and you can't get in a parking lot. And I, I don't get it. So for right now, I just stay away from it. You know, I just don't really understand the process.
All right.
But I know there's a lot of people out there that do commercial and they do well at it. And so
Well, let's dive. I was going
I
to,
enjoy.
along the lines of exit strategy. I think once you get into, uh, if we're talking about commercial notes, there's a lot of different ways to bring an ad and extract value, and so I think that's probably a whole other podcast or three. So let's get into some more questions. Ron wants to know, when you buy a pool together, how do you decide how to split the pool?
That's a great question. In the beginning, it was a nightmare until I kind of figured it out. In the beginning, what I did was, and I don't advise anybody to do this at home, is to go ahead, decide to buy all 54 assets or whatever it is, and then divide it up later on. That's the worst. Even though mine went successfully because it took a lot of collaboration, we had put an internal price on every note that we were purchasing, even though we were buying the pool at an aggregate price of 20% across the board. We had internal pricing on some notes at 70 and 80 cents on the dollar because they were such good assets, and other assets we had put into bucket number 6 at 2 cents. And then we had a round robin depending on how much money you came into this purchase with. Either it was 50,000 or 70,000, or there was one investor that had 5,000. And we figured the person with the most money gets to choose the notes first. So it meant that everyone had to do their own due diligence on the whole tape to actually understand each asset. It didn't really happen that way, but so what I've moved on to now is a first come first served basis. Although we will be pooling our money as a purchase, everyone needs to decide upfront what individual assets they are interested in taking down. And I try to populate the list of notes with as much information up front as possible to keep my people from having to do a lot of redundant research later on.
Great.
You'll get into that in some of the webinars that I've held in the past on how much information we can put onto a tape and kind of keep everybody from having to reread the whole thing. I've taken tapes also where I have, like I said, Mark help me out with some collaboration on these tapes, and we'll cut a tape in half. He'll take 50, I'll take 50, and we'll research it that way. we'll populate the tape with as much information as we can derive, and then put that out to a few select investors to save them all the redundant research. So there's a huge value add as well.
So I've got a bunch of questions. So I'm gonna push you a little bit through these. So we've got one from because we don't have that much time left. So I've got one from Harold wants to know how to establish credibility with banks. I think, if I could jump in there, I think you got to do a few things. One is they're going to Google you. What are they going to find when they do? Everybody I don't think there's any business relationship you're going to enter into today where the person's not going to want to, type you in there to Google and see what comes back. And so just make sure that you've got that cleaned up. You should have a presence. You should have a website. You should have an email with your own domain. Not don't be real estate ninja 125 at hotmail.com. That's not going to help you. They frequently they're going to want references. And you should be able to have some kind of a backstory. I mean, there needs to be a reason why somebody would talk with you. How do you find hedge funds? Sam wants to know.
I have been looking at hedge funds and talking with them for a number of years now. There is a few that actually have trading desks that you can get a hold of, and it's mainly word of mouth. It's mainly being out there and kicking tires and talking to people, finding out where they're getting assets from.
Okay.
Another way that we've done it is we look at the assignments on notes that we've already purchased, and assignments that we have that are attached to notes that we've already looked at or own, and go ahead and call back and find out who owned these assets before we did, and we find hedge funds that way. That's a wonderful way to find those.
Cool. Rod wants to know, can you go over some of the niches, what they are, and where they lead to in note investing? And I think this question's around like your second position, the commercial, et cetera. You want to just talk briefly about that?
Sure. Well, it might actually be easier if you, and save a lot of time. You can go to noteconference.com and click the Learn button on the left. We're actually doing a presentation, an educational presentation where we've broken this business down into 14 segments, and there's bankruptcy issues, that the borrowers are in bankruptcy and people shy away from bankruptcy. And like I said, I have a partner of mine who's become a bankruptcy expert, and he actually leans towards purchasing notes that are in bankruptcy. So
I think, Mark, do we have you live now?
Yeah, can you guys hear me?
Yep.
Oh, fantastic.
Hey, Mark.
Hey.
So tell me a little bit about what that means that you're specializing in bankruptcy.
Yeah, actually, it's not Mark. It's
it's not Mark.
I've always shied away from bankruptcy notes, and there are notes that you'll be reviewing, and you'll say, oh, chapter 7, this one's chapter 13.
Yeah.
I just stayed away from them. I had no idea that there was an actual reason why you would spend time just looking at these things. There's other niches. There's government programs that you can target first lien purchasing, where your specific exit strategy might be using a government program to get you cashed out at 80% of the property value with a refinance.
Yep.
That's an interesting purchase.
Yeah, I have a call with Scott Carson about that very thing at the website somewhere.
Very good.
I have a question here. Did you have any business plan at the start? Or how did you kind of get ahead of steam to have confidence with moving forward with dealing direct with the suppliers, hedge funds and banks and such?
Yeah, my confidence really came down to my education that I had. Like I don't want to sound cocky, but I had talked about a lot of notes, and I think we had covered in my my education a lot of material that it's, even to this day, some of these hedge funds have been picking my brain on just because of the education that I was willing to go through while other people were hanging out watching TV or whatever.
Right.
And Mark can attest to that as well. We had gone through such an extensive training program that I would have a conversation with someone, a note seller, and they're real people too. And this was a really interesting one that it built me a relationship to this day by showing some people a few shortcuts in Excel, because I knew that these people were messing around with Excel every day, day in, day out, combining spreadsheets. It's a lot of work. It's a lot of tedious work. And I found a product called AbleBits, and I introduced this note seller to the software called AbleBits. I think it was like $100 add-on where you can merge several spreadsheets into one without overlapping and duplicating. And I don't want to get technical, but this one little product that I had found saved this woman so much time that we're doing business together. It's a relationship builder. So it's the amount of education that gives you the confidence. When you don't know what you're talking about, you're going to sound like you don't have the confidence. So, and I've always talked to people as though they're real people, because they are, and they've got cats and dogs and kids, and
Right.
so,
Lunch breaks. And...
on the others, lunch breaks, and they're trying to make a living like everybody else.
So Carolyn wants to know, it sounds like you approach lenders with wanting to buy one-offs and then expand to bulk purchases. Is that correct?
The first conversations never even get to that point. It's and I don't get to that conversation. They obviously always want to sell bulk. I mean, let's face it. If you're going to sell apples, I'd rather sell a truckload than two.
Oh, sure.
So it starts off as, I'm going to show you this tape. Let's take a look at it. And then first it has to meet our criteria. And then we come back and say, well, it really doesn't fit. I really appreciate us being able to look at it, but we're only interested in these 5 assets because they fit. And the rest of them, for whatever reason, just don't fit our criteria. So they went from selling a truckload of apples down to selling us a basket full. And it depends on where you're at. It depends on who the seller is too. But a $50,000 trade is a lot better than a zero trade. And so it's up to your skills to make it as easy a transition as possible for them to sell you those 5 notes. Make it as easy on them as possible by going ahead and filling up the assignments, creating the assignments for them. Whatever it is that you can jumpstart that trade and make it a smooth transaction for them. It might be harder for you, but it's all about relationship and what type of asset you can bring to the table to make their life easier.
Sam wants to know, it's brand new to investing, so what is the most important step that he needs to take to get started on his very first note deal?
Well, I guess, again, it would be surrounding yourself with people that are familiar with this business. Depends on how involved you want to get. If you want to become get your hands dirty and buy some assets yourself, or you want to be a broker, or you want to get involved with your relationship, I would have to say that it's going to come down to your education again. Knowing what this business is all about, and knowing what assets you should be looking at and what assets you shouldn't be looking at. Very important as well.
If I can just
Sure.
interject for a second,
Yeah,
Mike,
Mark.
For those of you who don't know me, my name is Mark Munson. I work with Mike Rosica. What Mike just said is absolutely paramount. Surround yourself with people who are knowledgeable, people who you can trust. Take as much education as you possibly can. Without revealing too many secrets of what you're doing, go out and ask people a lot of questions. Anybody who you go to New Conference, go to noconference.com, but also look online and try to find some other events in the area and start talking to other investors. A lot of people, to get real solid continuous education, it's usually best to get an education course like the one that Mike has. But just for an occasional question here or there, developing contacts all over the country is something that you'll end up doing, and you'll find that niche guy who knows exactly, all the different kinds of bankruptcy and how to handle all of them, and you'll find the guy who knows how to handle RIOs. You bought a note and it's just gone too far and it's going to go into a bank-owned situation, and how to handle it and still make money profitably. Get out and talk to as many people as you possibly can. That's the number one thing in my mind.
Yeah. And it definitely, thanks, Mark. And it definitely will be a nationwide thing because it's a nationwide business. I own notes all over the country, and we don't need to work in our own backyard to either educate ourselves or to actually participate in this business.
I've got a question here. It says, do you have, and would you be willing to share, if you do, a checklist that you use when you're buying non-performing notes? Raymond wants to know.
Yeah, it's a little bit lengthy for a call like this. There's usually about 27 different points of interest that we look at when we're purchasing a note, and some of the key factors are, obviously, we look at the borrower. The borrower is key in our situation. We like I said, we like to invest in the borrowers, and then we look at the asset, the property, to figure out the value. And looking at the borrower to figure the propensity of potentially getting this borrower to start reperforming on the note has been key to our success. So we look at the borrower first, figure out, without obviously contacting anyone, contacting the borrower, but we have ways to kind of determine if they're a good candidate or if they're not a good candidate to get into a reperforming stage. So there's usually at least 5 factors that we look at. FICO score is one of them. The propensity to pay student loans back is very important. If they have student loans, it means that they're educated, or they're worried about getting their children educated. I take that as a plus. But like I said, we have a 27 points that we go through to determine that. And, value of the property obviously is going to determine that. And equity in the note that we're purchasing goes a long way as well.
Great. Boyd wants to know, he has working with investors who will buy notes, but only in their local market. Where do I find local notes? I mean, the thing that I'd say to that is to call in the community or regional banks that are selling non-accrual, and you can find out how to do that at Distress Pro. Did you have anything else about local notes that you wanted to say?
Yes, I do. I believe, is this Brian? Is that what you said?
Boyd.
Oh, Lloyd.
Boyd.
I would say that you need to, like my previous slides, would be to become an expert. And when you become an expert, anyway, I can't find it. You need to educate those people on this is a national business, and you got to get out of your backyard, because you're just not going to find enough product to handle their appetite. It's just not going to work. And they need to really get educated, and you need to educate them to tell them that note investing is a national business. Unless you plan on going out and flipping one house, and that's really not our niche. Our niche is to go out and buy several assets, 20, 30 that the bank does not want, get them off our plate, turn them into performing notes, and move on to the next batch. That's our business model. We're not after one property that I see down the street that has shutters hanging off of it that looks like it needs to be rehabbed. That's just not kind of our business model, if that helps.
Great. So we still have, Mike, probably, I don't know, a lot of questions, maybe 20 questions here, and we're at 11 past. I think what we should do is probably take a couple more, and then otherwise we'll tell people they should engage with you by going to noteconference.com or by emailing Mike at noteconference.com and let them know that you heard him on this webinar. Alan wants to know if you're finding a good source of occupied non-performing notes for 1023 conversions. That's fairly specific. Are you doing anything like in that niche?
I'm not familiar with it. I'm not familiar with that, and
Okay.
I'd love to talk with them to figure out what that is. I like
Great.
the
So
sound of it.
Alan, send Mike an email. Then we've got sounds good. John says sounds good, but can you explain how I can get started and make money without using any of my own money to start? And actually, Mike Rustica, you and I have 2 calls devoted to that, right? I think in the archives that are available to people. Isn't that what we talked about in our previous 2 calls?
Yeah,
Yeah.
oh yeah. We're constantly doing deals with other people's money or not our own money,
Yeah.
and I like to get my portfolio built up by trading in my commission or my fees for real notes for assets. So if I'm entitled to a $14,000 commission, I'll take 7,000 of that in cash because I like to eat, and I'll take the other 7,000 in a note that may be available for 7,000. So that's how I try to take down a few assets every time with none of my own capital, just by being in the trade.
Right. So if you go to distresspro.com/blog and in the search box, type in Mike's last name, and you will get several calls that we have with him where he goes in depth in just this thing, doing it without your own money. What do you need to convince lenders to give to invest money with you? Well, I think that is actually probably a whole talk. We could get into a plan and all that if you want. We do also have a recent podcast where we walked through a complete business plan about how to pull in folks with equity as partners. And then before that, there's also a podcast where we go into how to use self-directed IRAs. Money. So there's a bunch of questions about getting funding here, and so I want to point you to those resources. But as I skim down here, let's see. Can you talk about getting started with little capital and do you JV? I think that's along the same lines. People are asking about sample contracts. Do we work with IRAs? Do you have a preference on first or second position notes? Do you own your own servicing? So there's a lot of questions here, Mike, and I think we're out of time.
Nice.
Do you want to, will you be able to do something, a call or something like that through a note conference for these folks?
Well, I would love to do that. If someone, if any of these questions, I love IRAs, by the way. I believe in them firmly, and I heard you mention self-directed IRAs. Absolutely, this business is made specifically for IRAs. If you have more questions, just send it to mike@noconference.com, and I'll be happy to handle them. I'll hand some off to Mark as well, and to my other partner. And about servicing, we're actually affiliated with a servicing company that is wonderful. And yes, I do invest in first and second liens.
Great. And so I have one last question I'd like for you to answer, if you could. Spell your last name for people so they can find you, if you would.
Ruscica.
Great. Mike,
It says in Sam. Okay.
it's a pleasure having you here, and I'm excited to see what comes out of No Conference. And if you thought that this was a good use of your time, but maybe you still have some questions, email mike@noconference.com. Let him know that you heard him on this webinar. Go back to distresspro.com/blog and search for Mike Ruscica, and you can hear a couple of other interviews that we have. We have transcripts for them all. And other than that, it was great having you on here. Really appreciate it. And also thanks, Mark, for jumping on here too. I'm sorry we didn't. Sorry we had some technical difficulties there getting started.
No, that's okay. Thank you very much.
All right. Thanks, guys.
Yeah. Thank you, Breck. And how come we always run over on time with these things?
Because you're so much fun to talk to.
It's just so much fun. I really enjoy it. But,
Yeah. Well, we'd like to
thanks
see you
again
on
for
some
having
more.
us.
We've got upcoming series where I'm gonna have some regular Google Hangouts for Distress Pro members, and maybe we can get you to pay some visits.
Okay.
Thanks, Mike.
Sounds like a plan. Thank you, everybody. Thanks, Mark.
Thanks, Mike.
Bye-bye.
Thanks, Breck.